Hello, it's Wednesday the 30th. I'm FxPlew and this is the market brief. So Sunak has been on. He acknowledged the setbacks that we've had from Brexit and the pandemic, but he is confident that the economy will return to above trend growth next year. Seems to me he's practicing some of that hippie manifestation there. Governor Bailey and Deputy Governor David Ramsden were also on. They were testifying before the Treasury Select Committee yesterday, sharing their views on the collapse of the Silicon Valley Bank and the possible contagion risk that remains. Bailey noted the collapse had been the fastest since Barings Bank back in 1995. Shout out to Nick Leeson's rogue trader there. If you don't know that story, do read his book. Or at the very least, watch Ewan McGregor in Rogue Trader the movie for the trading jackets, if nothing else. By way of warning, Bailey said that the issues with Credit Suisse were unlikely to be company specific, and the Bank of England remains on high alert for any signs of weakness. So far though, there's very little evidence of any bank being charged a premium to borrow from the market. Fingers crossed that continues. Over in the US, the recession risk is back in the spotlight. Issues from the liquidity crisis have brought back concerns that the full effect of the Fed rate hikes has not yet been felt. Typically though, that would see unemployment rise, but the employment market remains reassuringly robust as we close out Q1. A timely reminder of how the big bank forecasts are often so terribly wrong. Remember, last year all the big banks were forecasting significant job losses in Q1, yet non-farm payrolls has gone from strength to strength so far this year. So Wall Street, just got a bit of egg on your face there. The Fed remains concerned about the remaining liquidity risk, especially within the regional banking market, where so many deposits have been shifted out of the regional banks to bigger banks with deeper liquidity. So far, they're not reporting any banks are struggling for funding, though. So again, long may that continue. Risk appetite is a major dollar driver this week, and yesterday the dollar index fell to about 102.40. Sterling has gained over the past couple of weeks as a little confidence looks to be returning to the outlook. We topped out around 123.50 against the dollar yesterday. We open around 123.15 against the dollar. We're about 113.75 against the euro, and euro dollar is around 108.30 this morning. Right, that's it from me. Bert's been a good boy. He gets to come out of the car for 5 minutes. See you tomorrow.
If you do not have a clue, then just tweet through and ask FxPlew.